Hi everyone, welcome back to the US CPA classes for regulation exam. In this particular video of US individual taxation for gross income part 8, we are going to cover non-business bad debts. So let's dive into to understand how to account for, how to tax the non-business bad debts.
Revenues, gross incomes, right? So most of the things we have done, like we have gone through almost all the normal revenues, which part of the gross revenue. Then in yesterday class, we have started with couple of you can say special category of revenue. In that, we have gone through installment sale methods, passive income. We have gone through the cryptocurrency, and the small topic we have is a non-business bad debts. Right after that, we'll be jumping today. The majority of our time we'll be investing today is on exclusion to reach the gross income or deduction from gross income to arrive at AGI. So, if you remember, when we have started this topic of revenue, before that, I emphasize on a table that is like computation of income. So maybe if you guys in your notes can go back to that table, this one, and here, like we are about to finish this first topic, which is total income. So after this, we'll be investing today's time on exclusion and deduction from gross income to arrive at AGI. So these two topics will be going through parallelly together in a tabular form, because what I have experienced in past with many of the students, they get confused between exclusion and deduction from gross income to arrive at AGI. So to make it easy, so that like I put it into a tabular form, so that like student can comfortably understand what is exclusion and what is the deduction from gross income to arrive at AGI, right? So these are two topics where we'll be investing majority of our time after this small topic of non-business bad debt. So let me take you back. Yeah, non-business bad debt. Have you heard this term before? Any idea what is non-business bad debt by any chance? Any of you have any experience or heard about this term?
I mean, any loan given to, maybe a relative or a friend, and
Mm-hmm.
we do not receive, so that is a loss.
Hmm. Yeah, very true. Like when you give any money to any of your friend, family member, or relative, right? So most of the time, it's hard to recover. Is it same with any of you have any such experience?
Yes, sir, and the friendship is also gone with that.
Yeah. So it's better to, like don't get into financial things with friends and family. So it's, better to have like personal relation separate than financial relation. So same thing is here. Like when you give any product, service, or loan or advance to any friends, family member, or relative, which is not of business nature, right? So you should not be considering that as exclusion, basically, right? It should not be, and the person who is receiving, for him or her also, it's not part of their income. So when a loan or advance is given to any friend or relative with an expectation of return of money, and the money is no more recoverable, then it is considered as non-business bad debt, right? So when you have given any money to any friends, family member, relative with the expectation that you will be recovering, but it's with the expectation of return of money, but the money is no more recoverable, and it's not relating to business. It's more of like the personal nature of transaction which you make. So you should not be consider that into your exclusion part of it. A non-business bad debt is reported as short-term capital gain or loss from 8949 Schedule D. It is subject to capital loss limitation, which is $3,000, which we have discussed. Right? A non-business bad debt deduction require a separate detailed statement attached to the taxpayer tax return. This include losses or gain attributable to condemnation. So two things here. One is from the person who is giving the loan, right? For example, like X has given a loan to his relative Y, right? And with the expectation that he will return the money back. But after 2 3 years, Mr. Y has not returned the money, and finally he wants to make it bad debt, right? So as this was not a business nature of transaction, so you cannot claim that as a bad debt. But on the other hand, if you wanted to claim it as a bad debt and you have a justified reason that you have given for some business purpose, then you need to file the details in form 8949. Right? On the other side, the person, Mr. Y, who has received the money, right? For him, it will be an income, right? A non-business bad debt is reported as short-term capital gain or loss from 8949, and Schedule D, it is subject to capital loss limitation. A non-business bad debt deduction require a separate detailed statement attached to the taxpayer tax return, like I was saying. So if you are claiming any non-business bad debts where you believe it is a business in nature, then you need to provide additional detail as an attachment to your 1040. Any loan or advance provided as a gift will not be considered as a non-business bad debt. So gift is not a part of non-business bad debt. Right? Clear everyone? So
Uh,
now,
Sir,
yeah,
do we
yes, yes.
require any kind of proof of that loan is provided to friend
Yeah,
or relative, like
yeah. So yeah,
documentation or payment through check, something like
yes,
that, or any?
yes, absolutely true. When you claim this, normally these non-business bad debts are not allowable expenses. But if you wanted to claim it, then you should have a justified reason and the proof to it. So proof may include your, like you said, bank transaction, check transaction, or maybe email communication or other written communication, or maybe any like agreement sort of things, right? So because the burden of proof will be on you if you are claiming this as a business expense, then burden of proof will be on you. As you have burden of proof, you need to justify it with the appropriate supporting document.
Sir,
Mm-hmm.
uh, non-business bad debt is treated separately for corporate as well as the individual, or same treatment?
No, it's for individual only. Why? For business, it may not be non-business budget because, like for any private, like in India, if you say any private limited company or public limited company, why will they do not have any relatives or family member, right? So for them,
But they
there
can
may be a
give loan
related
to the
party.
subsidiary.
Yeah, so I'm coming to that, but for them, there may be a related parties, right? But not the relatives. So in that case of scenario, it has to be dealt according to the related party transactions norm. So for that, there is a separate rules.
What about the tax rate? Is it short-term capital gain or loss is taxed at separated or same tax rate? Like in India, we have
Yeah,
different tax rate.
yeah, there are different tax rates. So ordinary income, like as we are discussing about individual taxation, what we call it slab rate. In US, they call it marginal tax rate. Right? But the thing is same like 0 to 10%, 10 to 20%, so on and so forth, kind of thing. Up to 40% it goes based on the level of income. So which we'll be discussing, when we reach to the tax topic. And second thing, yeah, capital gain is of two categories: short term and long term. And long term capital gain is generally taxed at lower tax rate, and short term capital gain is slightly more tax rate.
And sir, since we is going to be considered as short-term capital loss,
Mhm.
so in which category we can set off this loss,
Short-term capital
or we
gain.
can be
So
short-term capital gain, right?
yeah. So if you remember in third chapter, we studied like netting of procedure. So when we
Right.
have studied like assets, so they when you compare to India, there's a slight difference in the netting of procedure. So first, like short-term capital loss can be adjusted against short-term capital gain. So which we do in India, and long-term capital loss will be adjusted against long-term capital gain, right? But in US, there is one step further to it, which is net short-term capital loss or gain, or net long-term capital gain or loss can also be further adjusted net off against each other, and then it resulted into final capital gain or loss. right?
So
Which
let's
we
suppose if
dis-
Sure,
somebody
sure.
recovers the money in later year, is it going to be taxed again as a capital gain?
yes,
So what about the limitation period? Like in India, we have 3 years as a
2
limitation period.
years, 2 years, 2
2 years.
years. Mhm.
Which is covered by which law? Like India, it is
Statute,
covered by Limitation Act. Sorry,
statute of limitation.
statutes of limitation. 2 years. 2 years is for every transaction or just for the individual? Means in the
No,
even in the corporates, 2 years the limitation period.
no, like there are two things. Always when we are studying the law, there are two things. One is like general provision and one is specific provision. So where it has been specifically mentioned that the statute or limitation period is 5 year, 7 year, 10 year, right? So then you will be following the specific provision. Otherwise, you will follow the general provision, which is 2 year. Like
Okay.
if you remember, like in India, when we study the law, it's in the preamble or maybe in like initial definition when we study. So there's one terminology is used. I'm not recalling exactly what the terminology is, but the crux of the story is that when you have any specific law, so first you'll be following that specific law or provision of that specific law. If there is no specific law for any particular transaction, then you follow the general law. So general law is a 2 year statute of limitation. But for example, let's assume for interest penalty, right? So if they have given like they can do up to 5 years, so then you need to follow 5 year rule,
Okay.
right?
So considering this, there's a lot of scope of tax planning in the US because in India there is no such tax treatment. But in US, since they are providing just loan,
Mhm.
loan means loan to relative as a capital loss. So anybody can plan a huge amount of capital gain against this loss.
But like then you need to prove this.
So it's not difficult. Na? I'm giving you money and I'm asking you not to pay me. Just
No, it's not. It's not. Then
after
it
two
will be
years.
tax. No, then it will be taxable in other person hand. No?
Right, right.
So
And it
so
will
it will be taxable in your income in year as a capital gain.
The person who is receiving, yes.
So so they have mechanism to cross check like in GST there is a linking. So
Yeah,
are they
social
have mechanism to?
security number is being linked with everything,
Oh,
anything and
okay.
everything.
Okay, means SSN number is required to be given in the return when we are giving some loan to any relative.
Yeah, so no, when you are asking
Asking for
that
the loss. Yeah, yeah.
loss, yes, yes, we have to provide that detail. Same way how you give like PAN number for any
In India.
TDS you
So
deduct.
there is a 1 lakh rupees limit. Is there, also there is a cap in US?